All right, well, good morning, everybody. Good afternoon, good evening. It is a sunny day out here in Montreal. I'm back in Montreal right now. I will be back in Hong Kong in the next 2 weeks or a week and a half, actually. So those of you who are in Hong Kong, get in touch with me, or those of you who are in Montreal, get in touch with me as well. So, before I begin, I always like to know who's in the room, where is everyone from, and I'd like to also know who is been here for the first time, who's in my webinar for the first time today. DZ Bista, I hope everything is okay in Nepal. If it helps, we're making a large contribution to donations to Nepal as well through iTunes and through Facebook, just to leverage it out. But we're there for you guys as well. Nuno, Portugal, Chicago, you're new. All right. Tampa, Toronto. Oh yeah, Paul. I'm gonna be in Toronto in June. I'm doing a seminar with Mr. Giuseppe. So looking forward to seeing you guys who are in Toronto as well. Singapore, Kenya, Australia, new person, Nigeria. Okay. Nathaniel, good to see you again. Netherlands, South Africa. Okay, so it looks like we've covered a lot of the world here. Pakistan, good to see you. Good to see you. All right, so shall we get started here today? Steve, UK, first time. Welcome, Steve. Welcome. All right, so for those of you who are new here, I'd just like to let you guys know that we do things in my webinars a little bit differently. In my webinars, I teach a little bit, I interact more, and then I continue teaching and interact more. So there's it's not just me blabbering for 45 minutes, right? Like that's just really boring. And I need to be here. I need to train you guys. I'm here for a reason, and let's make that reason useful. Okay? And towards the end, I will make a promotion, of course, of my company, but I'm not here to promote my company. I'm here to teach you guys. So let's get that out of the way first. Okay? So, hi, Anne. How are you? Good to see you again. All right, so let's get started here. So today's session is based on live analysis, and we're going to go through a process of, how I go about doing my live analysis. Okay, so how many of you guys have a routine? We discussed this in the last webinar. How many of you guys are following that routine now? Okay, let me ask you guys this. How many of you guys were here in that last webinar or watched that last webinar about routine of a trader? It was rated as the #1 most watched webinar on FX Street. I'm hoping someone saw it. Okay, Edwin. Okay, follow routine every day. Watching just started. Okay. So what it is I usually like to start the days with going to Forex Factory or FX Street, whichever one is your preference, just to look at the calendar, right? Just to make sure that what's coming up for the day. I removed anything that's yellow, and I only keep an eye on things that are orange and red, just to see where's the turbulence in the market. Now, red doesn't make me stay away. In fact, it gets me quite interested to see that the market's going to move today and there's going to be some volatility. All right, so today it looks like we got a lot of news coming in for US dollars and New Zealand. So which one would you guys like to begin with first? Should we look into the US dollar group or the New Zealand group? US dollar? Okay, let's take a look at US dollar. All right, I think this is already on the USD group. Yeah, this is on the USD group right now. So let's scan through. Start with the first one, Euro USD. So open that up and move this little box somewhere. Let me close this box. Okay. Let's start with the daily, shall we? Just to see what's the flow of the market. Now, delete. Okay. So as of right now, what's the state of the market? What would you say? Is the market in an uptrend? Is the market in a downtrend? Is the market sideways? A channel? To do a channel, we need parallel lines usually. Okay, let's see what this room's got. Let's see what you guys are all made of. Downtrend, uptrend, sideways. Too early to tell. Okay, fair enough. Okay, pause on downtrend. Okay, downtrend but consolidating. Okay, so let me ask you guys a general question. Are we watching this as a downtrend? Are we watching this as an uptrend? Or are we watching this as a range? Where is your eye focusing on? When you look at this chart, where does your eye look at generally? Okay, so this is a question that needs to be answered really, really well in each of your mind is what type of trader am I? Am I a long-term trader, which means I need to focus more on this picture? Am I a short-term trader, or I need more immediate information, which means focus here? Or am I a swing trader, which means my focus needs to be more on this level? Okay, so that question always needs to be answered because this is a daily chart. Now, for those of you who are saying this is a downtrend, by the time the downtrend resumes again, months will pass by. Okay, and I doubt you guys are trading on one trade a month. Okay, so this thing is already out. Now, getting closer to current scenarios, we already have data from March to May coming in. Okay, so how do we read this? How do we read this? Let's start from left to right. Whenever reading the markets, never look at it for what it is in a snapshot. Read it left to right. It's not about what do you see, it's all about what's happening in the market. What's the story? Okay, that's the word we like to use in our private conference rooms. Like, what is the story of the market? What are they doing? So as my mouse begins here, walk with me, guys. What happened from here to here? Okay, let me delete all this first. See if I can get an arrow running. Okay, from here to here, what did the market do first? Okay, steep down, right? Now, did this down break all records? Oh, sorry. Last time, this was the lowest point, right? And did that downtrend break that record? Yeah, right? So it's officially in a downtrend at that moment. And then what happens from here to here? Good. Retracement. You can call it fib if you want to. It came up, not as strong as it went down. In fact, I like that explanation the best. It came up, but not as strong as it went down. That is the best explanation to use instead of the word retracement. Retracement can mean a million things. But that sentence you just said, Menno, defines it really, really well. So it retraced. Now, when it retraced this much, does it tell you that the sellers who came earlier are dead? No. We need to remember that story. It means the sellers are still strong and they're giving the buyers headache. This is why we see some red candles in here. They're not letting them come up so easily. Okay. And then it pushes down from here to here. Does it go all the way down? No, right? Okay. Goes up again, makes a double top. So when it made a retracement, well, everyone who's a fib guy is like, okay, 50% retracement, hit the sell button, and let's go pick up a Ferrari. Well, it didn't happen. In fact, they couldn't even afford a Toyota at this moment. What happened? The market turned around, went back up. But when it turned around and went back up, it didn't make a higher high either. It didn't beat its own record. So what happened here? Now, what would you say? Who's in control of the market? Are the sellers in control or the buyers in control? Balance. That can be a correct word. Zuzana, that is also correct. No one. This is unmarked territory right now. We don't have higher high because this was the last high it had. The market didn't go above him. Then it made this high. It didn't go above this guy either. So buyers are having a tough time. And then for sellers, his last record was here, and he couldn't beat that either. So the sellers are not here either. We are now in what we like to say twilight zone. Okay. We don't have any sense of buyers or sellers coming in. Now, there is a way to read this. Of course, we're not going to get into that today. But just in general, to show you where's the flow of the market. Now, a quick question to you guys. If the markets are in a downtrend, how do you trade? If the markets are going down like this, for example. Okay, you sell, right? But where do you sell from? Like, for example, let's say the markets are all the way down here. Can I sell right there? Yeah, Marcus, very good. You sell pullbacks, right? Pan on fire, very good. You sell pullbacks, you sell supply, you sell fib retracements. Anything that pulls up, you sell. And that's in a downtrend. Now, to know that you need to sell, you must first know it's a downtrend. Don't just look at it and say it's a downtrend, right? So for you to even get ready to sell, you must first know it's in a sell direction. Same goes for uptrend. If you reverse the scenario in an uptrend, for you to be a buyer, you must first acknowledge and confirm markets are upwards. How do you trade in a range? No trade, no trade. Jason, at top or bottom of the range, very good. PN Raganathan, breakout. Stay away from breakouts. I would, my personal opinion, but stay really away from breakouts. Okay. Buy low, sell high. Very good. Did my... Yeah. Sell at the top, buy at the bottom. Very good. So this is the flow. Where is my... Like that, right? Can you guys still see my screen and hear me just fine? Okay. Good, good, good. Good. How are we doing on the people here? No one's falling asleep, yeah? You're gonna get in really big trouble by me if you guys are falling asleep. All right, okay, good. All right, so moving on forward. So there's a sell on top, buy on bottom. So if we know it's a range, we know the game plan is sell on top, buy on bottom. All right, moving forward. So now, in that particular case, so we know what we need to do in a downtrend. We know what we need to do in an uptrend. We know even how to trade in a range. Right now, we're trying to figure out what is the state of the market. Are we in an uptrend? Are we in a downtrend? Are we in a range? Without that knowledge, we're lost. We have no clue what we're doing. Okay? So when we see this information and it's a downtrend, then it's a retracement. Okay, as a retracement, we're sellers at this moment. We're sellers somewhere around here, right? But when you see the sell does not succeed, something is wrong. Is the market turning into a buy? Well, to be a buyer, you need a higher high, higher low, right? What's an uptrend? The highs get higher and the lows get higher, right? That's a sign of an uptrend. These highs, the high gets higher and the lows get higher. That's a sign of an uptrend. Now, for this to become an uptrend from here, here's a low. The low got higher, but here's the high. The high never got higher till here. So it's not an uptrend either. Then the market goes back down and makes a lower low, but it does not beat its previous record. So it's like, wait a minute. We have two bottoms here. We have two tops here. At this moment, we are in what we call a range. Make sense? You see how we came to that conclusion, trying to figure it out? If you go with it step by step, things will make sense. If you rush into it, it'll look like an uptrend or downtrend. Or you'll stay away from it. And that's not the point. The point is not to be scared from it. The point is to know what you need to do and approach it accordingly. Okay? So once this happens, the market starts to reclimb again. Because now that you know if this is the bottom, this is the top, when you see a struggle down here on the little retracement on the way up, that can be analyzed as we're closer to the bottom. Buying it is safe. Okay, now we're getting closer to the top. Selling it is not so. Buying it is not so safe anymore. So once you know the state, you know what needs to be done. Without that information, it's blind trading. Okay. All right, so now markets are going higher. Now, is this an uptrend? What's happening right now as we speak? Okay, let's see where your knowledge takes you again. Okay, Jason, very good. DZ Bista, very good. It's made a new high. Pan on fire, very good. Okay, so if this right here was a low, this is a higher low. That's pretty good. That's a high. But the higher high right now, we don't know anything about it. Here's why. What if this candle closes as a wick? The candle's still running. It's got a good, 7 hours to go. That's a long, long time. By the time, if it comes back down and closes here, we're back in the range. Now, if we're back in the range, people who are thinking this is an uptrend will look to buy it when actually most professional people will try to sell it. Seems weird, doesn't it? It's like, whoa, the markets are going up. Who would sell in a market that's coming against them? Well, it's not really coming against them. It's just getting to the edges. Does that make sense? Are you guys understanding what I'm trying to say here? That is only if you know the state. If you don't know the state, of course, this will simply look like an uptrend and people will try to buy any little pullback that comes in. And that will get you plastered, basically. Yes, Mitch, the big candle breaks are major S&R levels. Yes, so this is a big candle break, but how do we know the candle's going to close up there? That's an unknown territory right now. We don't know that information yet. And that's what I'm trying to explain. It's too premature to call it an uptrend. We got 7 more hours to go from it. Okay? Yeah, so everything with me here on so far. So what is the current state that we're in this market right now? What's the game plan? Yes, range. Once we know we're in a range, what must we do? What's our game plan for ranges? Sell at top. Now this sell at top is causing some issues right now. So all we must do is wait. Once we wait, we know more information. Until then, okay, if it closes on top, retraces down a little bit, then it can become an uptrend and can use this top line as support. Okay, then Mitch, what you were saying as this becoming support equals resistance, this can be a good area to buy from. Okay, so for now, markets are in a range mode. Okay, now let's confirm this theory with the next pair, shall we? Let's move on up. So Euro USD, nothing that needs to be done now. In fact, it's on standby mode. Okay. Now you'll notice a lot of people in most forums and chat rooms are getting really, really excited by seeing like 3 or 4 really big green bars. That gets them really excited. It's like they just drank 50 Red Bulls and they're just thrilling to get in on the action when it's actually a moment to wait. All right, so let's take a look at pound USD. Now, walk with me on this one. Let's start from here. What did the market do from here to here? Okay, a downtrend. Now, this downtrend that happened, did it break its record? Yeah, it broke its record and it stayed down there, right? It wasn't just a tail and then came back inside. It actually stayed down there. Okay, so this is an official downtrend. Okay, and then the market retraced, came up to here, and all the sellers try to hit that sell. Now, once they hit that sell, what happened? Here to here. Let's not jump ahead to here. Let's jump only to here. Now, it went down. That is correct. But how far down did it go? Remember, don't look at this. We don't see the future. We can't be Mr. Hindsight. It came back to support. Okay, so what does that mean? Is this downtrend still continuing? No, it means caution right now. It means something is wrong. We didn't break its record, which means it can't be a downtrend because to be a downtrend, we need 2 pieces, lower highs and lower lows. Our lower low just had a problem. Okay, so then it retraces and it goes back up. Okay, as it goes back up, where does it hit again? Triple top, quadruple top, whatever you want to call it, hits resistance when the market bounces and goes back up. What happens after that? Walk with me and pay attention very carefully what I'm going to say next. What happens after that? Makes new lows. Now, take a good look at this area. Would you say this right here made new lows? Okay, why would you say this has made new lows? Is it because you can see the candles? When you see something that just pops out and pops right back in, you can extend this out. Here's why. Take a good look at this area very carefully. I'm going to move it up 1 time frame. It's what we call a railroad track. It just goes down and goes right back up. It's an equivalent to a tail. That's all it is. Which indicates that the sellers are not actually there. Railroad tracks basically means market reversal, right? Anyone here who doesn't know what is railroad tracks? Basically, they're just two like a green candle and then a big red candle just right next to it. So on a higher time frame, that basically looks like just a wick or a tail. Yeah, there's many names for it, but what I'm trying to say is if it goes out quickly, comes back quickly, that means it's not real. It's not real. So that means nothing has happened to our state. Our state is still the same. We're still in range mode. So as it comes back in, your buy begins here. Okay? As your buy begins here, we know that we're going from top to bottom, bottom to top, reaches here. And once it reaches here, you see this coming in at full force, a single blow. It pulls back. This is too shallow to buy because we're still in a range mode. And in a range mode, we can't assume this is going to be a buy from here because there's sellers just up here. So that buy would not flow. Now, when we wanted to compare this together with Euro USD, what's the state of Euro USD? Is it in a range? Yeah. Now, what is the state of pound right now? Yeah, it looks like it's a clear uptrend because there's no way this thing is coming all the way back down and saying, nope, that didn't happen. You know, this is actually going up to challenge this guy. Okay, of course it's going to react from here. As it reacts from here, maybe there might be a nice buy opportunity as it pulls back. Okay, so we are in an uptrend on pound. So for the game plan for pound currently seems to be based on how it reacts from there. It can be possible a bigger range, but Jason, when we look at a range that big now, like for example, if we're doing a range this big, it's going to take forever for you to get ready to do a trade. You need to keep it a little bit to the minimal side, like something this big. So that way, otherwise, yeah, it'll end up being months before you get a trade. That little retracement, Nuno, no. Here's why: because there's sellers sitting right up here. We can't buy in the face of those sellers. It's too dangerous. We would like to be buyers down here. That's the safe area. Okay, when we see stuff like this, that's safe. But up here, it's gives you an exhaustion candle. It reacts from the top of this range. It was in a downtrend. Everything points for a sell, but when it comes down a little bit and the market blasts up north, that's dangerous. But who knows where the trade for this was? Who can guess where was the trade for this? Or not guess, who can identify? Mitch, correct. One with long tail, correct. Sunshine, correct. Now, so the first trade, okay, was here. This right here is what we call the gold trade. The gold means this is the first spot people make money. Okay? This is like the bankers, the hedge funds, and everything. The second spot is usually, 50% of the crowd. We call it the silver, where it's like, oh, somebody noticed it because it happened after effect. They get in. Then the third wave is 80% of the market, which usually ends up failing. Because now that everyone sees this as an uptrend, they're going to try to buy it up here, and they won't know that this thing can get hit and smacked down from up there. So everyone who tries to see this at the last minute, like, oh, I want to make money too, they're already going in what we call the third stage, which is leftovers. So the first stage, gold. Second stage is silver. And then as you go into third and fourth, we're talking about leftovers. Okay, which usually doesn't work out so well. So this is the correct area right here. You guys are having screen lag. Let me restart it, maybe. Wow, there's a lot of people in here today. 108 people. Okay. Let me know when you can see my second arrow where my mouse is. Sorry, let me move my mouse. You see it? Okay. So this was that little mini pullback before it took off. Now, I know it's tempting to say that this is the best area to enter because we can see in hindsight that look how far it went. But as traders, we can care less about that nonsense run. As traders, we need to be where can we get in safely? So, the next candle, this one right here, it closes outside. Okay. The next candle after that, it reacts, bounces off the top of the range, leaves a big tail and closes. I'm still not interested in buying it yet. It's only at the opening of the next candle. That's when I'm curious to buy it. Okay, so that's where the buy then begins. Correct. It's not during the hammer, it's after the hammer. Okay, so now buy at top. Well, this is the top right. No, buy at the opening of this candle right here, where my exactly where the arrow is. Okay, but if you're saying top of the range, we're outside of the range now. It kept bouncing off of this area, left tails on top. I'm sorry, wicks, reacted, but then it came back up. Okay. Zyme, yeah, don't worry about the 400 pips. It's never about the pips. It's always about to risk to reward. If you're able to trade it from here and your stop loss is just below here and your entry is right there, that's your risk. Now your reward, if you can get that double, you're already making 200% on your money. Okay? And that's, that's nothing a bank can even give you in a year. So respect that very, very carefully. And don't aim for the big runs because there's no need. Which time frame you enter? In this particular scenario, I would enter the 4 hours. So I watch this carefully here, see how things react. I would actually go on to the 4 hours to see how it closes outside the area. And this would clue me off on the 4 hours. Boyki. You guys see this right here? When it closes outside of the range and it comes down and it reacts, leaving tails, that's my clue that this is it. It's not coming back in. So even this line where I said I would enter here, notice how the buyers take over again and I enter after. So the clue of the tail plus the buyers coming back in and me entering after that, that's at that moment, it's like, it better go up or I'm going to be fighting with some bank, or some brokerage who's taking my money for no reason. Okay. What is JS? What is TC candle? Give me trend continuation? Oh, okay. You're asking another person. Okay. Carlos, but after concluding that the pound is making higher highs, would a pullback on the 1 hour offer a buy opportunity? No, don't switch time frames now. Now that something like that is very, very tempting to keep buying pullbacks. Now, let's not forget what the flow of the market is. The flow of the market is eventually down, right? We can clearly see that in hindsight. Problem is, it made the new lows after it went below here. But this low held on just for a little bit and came back up. So we need to know that, is it really going up or is it becoming a larger range like someone else pointed out? Because if it is a larger range, buying any pullback from here can be dangerous. It's like buying this pullback right there. Like that's too dangerous to buy it from there. Okay, so we need to know for sure that once it pulls back and if it comes in deep enough to here, maybe we can go back to the 4 hours and buy it again. Okay, because the buyers are extremely strong right now. Okay, so pound is in a buy mode, but we're getting close to an edge. Okay, so in a scale of 1 to 10, how would you rate the quality of the next buy that's coming up? Yeah, the smaller numbers are correct. 2 or 3. And here's why, because the golden opportunity was down here. The second chance was here. So now it's like third chance or fourth chance. We're already getting close to, you know, if you didn't make money in the beginning of this flow, then markets don't continue with full speed forever, especially in a downtrend like that. Okay? Assuming it's going to break the downtrend and go up forever or longer, that's putting money on a idea, a hypothesis, right? And never put money on an assumption. Always put money on something that you know, that you see, on reality, basically. Okay, so yeah, I think I spent too much time explaining today. We couldn't go over more of the pairs, but let's go through some questions. We got a few more minutes. Let's go through some questions. Anything that you didn't understand? And that's a good question. So if Euro USD, here's what Euro USD was doing, right? It was going like this. It was in a range, and the market was just slightly above it like that. Correct? And what did we say about the Euro USD? That I don't know if it's going to be an uptrend or not. But in pound, it clearly is an uptrend, right? So if pound is clearly in an uptrend, maybe the chances are high that so will Euro USD be in an uptrend. So that's how you read it in terms of correlation. Okay. Will there always be pullbacks after breaking from a range? No, not necessarily, because take a look at this. Look, this broke from a range. What happened to the pullback? It never stopped. It went right back inside. Constantino, yeah, most likely the webinar is recorded. Should be able to watch it. So, by the way, guys, I'm hosting my next. So here's the thing. So I'm in Montreal now. Toronto, I'm going to be there next month with FX Street and Oanda making a seminar there. In June. We'll be in Hong Kong in 2 weeks, and in probably July or September, I'm gonna be in Koh Samui. We're getting a big villa there, and we're doing some one-on-one trainings with some of the members there. So, for those of you who are interested in one-on-one training and want to do it in person out on an island or something like that, get in touch with forexwatchers.com. Otherwise, all our other memberships are completely full right now. Here's a little sneak preview of our members area. Everyone, chills here. They go playing golf together. They're having a good time. We post our trades, our screenshots of how we do. All that stuff is there, including some of my analysis, some of my articles. They're all here. So it's a good community. Everyone's here for the long run. Everyone in this community, they've been there for years on end. There is no such thing as a member for 1 month or anything like that. Everyone's there for the long run, and they're good friends. Here's pictures of everyone getting along together. So we meet in person quite often. So love to see you guys be part of that team and the group, and love to see you guys in person. The email address is info@forexwatchers.com. Okay. Thank you so much for attending, guys. I look forward to seeing you guys on the next month's webinar. And all those who are new here, I hope this wasn't too difficult to understand today. If there's any questions, you guys can definitely send an email to that email address I sent you guys. they'll forward the email to me and I can answer your questions. Okay? You guys are the best. See you guys next month. Take care. Bye for now.